Hello, let me explain you my setup. So in my setup, I use two indicators, one which is on the right side in 3 minutes and one which is on the left side but split into two charts. One is 15 minutes and one is 3 minutes. Okay. Now the idea here is to take the trades where there is a possibility of a move, right? Or a good move, or at least possibility of scalping. That means we should avoid trading in the ranges or when price is consolidating, because by default, the risk will be too high and chances of losing will be more. So how to identify if the price is consolidating or there is a trend? So there are several ways. Okay, there's a price action with which you can know it, but for ease of use you can use the indicators which are on the left side. So the indicator which is on the left side basically tells you if there is a trend or not. Okay, so when there is a trend, and especially on the 15 minutes, okay, so on the 15 minutes, which is top left part of the chart, so here if you have an alert, okay, and then you see a green stop loss line after the alert, and if this stop loss line is sloping upward or sloping downward, tells you that there is a strong momentum. Right now we can utilize this understanding that there is a trend, there is a momentum, to make precise entries on the right side chart. How, I will explain you when I come to that indicator. But on this side you should understand that apart from this, you can see certain lines, right? These lines do work as the targets and important support and resistances, especially on 15 minutes. Okay, so we can basically look at these lines and understand if price is moving towards them or it will take support there. And ideally we should be taking trade when there is a good momentum, because if you wait, the patience basically pays you. And if you wait, if there is a nice signal on this, then you should be ideally trading and taking the trades. Okay, now there can be also chances when there is no trend indicated by 15 minutes and still price is falling. That is a possibility. Okay, most of the time when there is no signal, the price is consolidating. Basically it means there is a range, right? And there is a range, then you should avoid trading or go for very minimal targets. We'll discuss about that. Okay, but it can happen that the price is moving but there is no signal. So for that reason we have 3 minutes chart. Now 3 minutes chart, you have to follow the similar rules. Okay, now here the lines that you see basically can be used for immediate targets, okay, but not really major support and resistances. Okay, now the best trades will come. The best trades, ideally if you can wait for those, then nothing good like that. When your 15 minutes is showing you alert, okay, 3 minutes is also showing you alert, the stop loss lines are intact, both are trending up and down. Okay, now this is the best time. There you can make n number of entries by using the right side of the chart. Okay, for precise entries with precise stop loss, right? So if you can wait for that, nothing like that. Whenever this happens, you will you can get really good trades. Now if both are consolidating, if there is no signal in both, that means it is the not really good time to trade. You should not take any entries, right? Because the price is consolidating. Okay, now it can happen that there is no signal in 15 minutes, but there is a signal in the 3 minutes left side chart. Now this indicates, okay, there is a minor momentum within a range, from top of the range to basically bottom of the range, right? Or from the bottom of the range to the top of the range. So if it is like that, then you can still make entries, but trade with small quantities and for the smaller targets. Okay, because the risk will be anyways higher. You are trading in the ranges, right? So I hope you have understood the usage of the indicators on the left side. So they tell us momentum, they tell us trend, till what time it is intact, and also it tells us the levels, especially the 15 minutes. And another thing, friends, especially when, if you look, especially on the 15 minutes, when the trend line, or rather the stop loss line, disappears, right? That is also a sign of reversal. Then basically what you can do is, reversal, not a big reversal, but a smaller pullback, you can say. But you can still, if you're a scalper, use the right side chart to make certain entries, which will be actually a pullback in 15 minutes. You can utilize those, okay, if you're impatient. But in general, you should wait for proper trend to form, okay. So I've understood the usage of the left side of the chart. Now let's try to understand the right side of the chart. Now on right side of the chart, so there are primarily three components, okay. One is the EMEA, which is also a trend EMEA. So trend EMEA, when it is sloping down, it tells you there is a strong trend downwards. When it is sloping up, it tells you that there is a trend upwards, okay. And also it is represented by the color, okay, color of the EMEA. The second is the basically swing levels, you see. So here you can use these swing levels or the lines for immediate target, okay. Don't use them for support and resistances because they are 3 minutes only, unless it has confluence with some support resistances on the 15 minutes lines. Then it will be actually a powerful level. And then the candle colors, okay. So you have to understand the candle colors as well. So you can see there are yellow candles. So you can say that yellow candles are powerless candles or meaningless candles where you should not act at all, okay. Then there are dark red or dark green candles, then light red and light green candles. So dark color candles indicate that there is a momentum in the candle, as well as you are in the direction of the trend, okay. And if the candle color is light, either green or red, that means there is possibly a momentum, okay, but you are maybe possibly against the immediate trend, okay. So this is why they are partial power candles, okay. So we should be mostly looking for then two kind of setups, okay. One is the continuation setup after pullback, and one is reversal setup, okay. So first let's discuss the continuation setup after the pullback. So what you should be doing is you should basically wait for price. Let's think about short, okay. So in short, price is falling down with some momentum, dark red candles. Let the price retrace to the EMEA, okay. And then of course when price is retracing, you will see some yellow candles or possibly light green candles, okay, or a green candle. So let the price retrace till EMEA, and you need to always enter near the EMEA. So near the EMEA, if a bearish red candle appears, then you make an entry, okay. Simple. Now here, what will be the stop loss? Now stop loss can be just above the red candle, okay, if it is a big red candle, proper bearish candle, or if you see you can see the tiny dot just above the dark red candle. So you can put your stop loss there because that is more logical and technical stop loss, okay. But for proper bearish candle, which is big enough, you can put just above the candle itself, okay. But if a candle is small, you are not convinced, then keep your stop loss at the dot, okay. So this is typically pullback setup for downside. Now for upside, what you will do is, of course, you will see the signal on the left side if there is a trend, and then trend EMEA is going upwards. Then you wait for a solid or dark green candle to form near the EMEA, okay, and especially after couple of yellow candles. If that happens, then you make an entry. Now you're not supposed to make an entry when the price is too far from the EMEA. If at least 3 or 4 dark green or dark red candles have appeared, because that means you're too far. The price has tendency to always come back to the EMEA. So do not make an entry far from the EMEA. You need to wait for the retracement, okay. So this is typically the pullback setup in the direction of the trend, okay. Now the reversal setups. Now of course there is a chances of reversals which can happen, and typically if let's say SL line, is disappearing, stop loss line is disappearing 15 minutes, and maybe then at the same time 3 minutes you can see the opposite signal, that is typically a sign of a reversal. So how do you take the reversal trades? Now typically in reversal trades, sometimes you can get a direct solid red candle, right, which is closing from the top to the bottom of EMA, trend EMA. Then you can make an entry, okay, if it's a solid red or solid green from basically bottom. But if it's not really solid or rather dark color candle, and if it is light green or light red candle, because it's partial power, you have to wait for 2 times the entry, the 2 times the price move on the same direction. That makes partial is equal to full. Okay, so that means let the candle close. Let's take example of short. So for short, let the price candle, which is light red candle, close below the EMA, and then let the price again come back to the EMA or go above the EMA and again come down. Now second time, if basically price closes down the EMA without breaking the previous swing high, any swing high which you see, okay, that swing should be maintained, then you can make an entry on the second time, because then it means the reversal is proper. You're basically entering in the retest. Okay, on the same way, if the price has been moving down and you want to take a reversal trade, then ensure that of course there is no downtrend still on the 15 minutes especially and 3 minutes. Okay, and then you can make an entry when first time there is a light green candle closing above the EMA, maybe price going up and again coming down to the EMA or breaking it without breaking the major swing low which has been created, and again going up and closing above the EMA, and in that case you can again make entries. Okay, and the target should be the nearest basically swings. Okay, when there is no trend basically, or in the consolidation, you should go for 1:1, right? But when there is a strong trend, especially on both 3 minutes and 15 minutes on the left side, then you can go for bigger targets, which are basically the lines which are showed in 15 minutes chart, right? And also you can go for 1:2 or 1:3, because price will again retrace to the EMA, and again you can make entry, right? So you can define your own approach for basically booking. But overall, when price is consolidating, not moving, go for smaller scalps, and when there is a trend on the left side, then go for bigger targets. So I hope it is clear and understood.